A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We've talked about many different types of ETFs in these segments, but not this type. Today we're going to focus in on IPO ETFs with our ETF Research Director, Nina Mishra. This is particularly timely because we just had a pretty big IPO come to market here.
Exactly.
In the past few days.
That has been Snap, which is the parent of Snapchat.
Yeah.
Has been the biggest story in the market over the past few days.
Right.
It is the biggest IPO since Alibaba's IPO in 2014. So that is why there was a lot of excitement about this IPO.
Right.
And shares listed at $17. They opened at $24 and continued to surge. In fact, there was a surge of 44% on the first day, continued to rise on the second day, and then fell in the last 2 days. They have been selling off.
But that's typical, right? That can happen with IPOs.
That can happen with IPOs. In fact, on the second slide, I have this chart of Snap over the past 5 days of trading. See how volatile it has been. Trading has been very heavy volumes, and it's been very volatile. So now it is trading below the first day price.
Yes.
So if you invested on the first or second day, you have a paper loss on this holding. So investors are getting concerned about the valuation, even though there was a lot of excitement, because the company at the current share price, it has a market cap of about $25 billion. And they are not making profits. They had revenues of about 400 million last year, and a loss of more than 500 million, I think about 515 million. And they are not expected to make profits anytime soon. The company has, Snapchat has average daily users of 158 million, and they send out about 2.5 billion messages every day.
Right.
So the growth potential is there, but does the growth potential justify this valuation? And Facebook, Instagram, which is owned by Facebook, now has about 300 million average daily users, and they have a feature called Instagram Stories, which is quite similar to Snapchat, and they have been growing faster than Snapchat. So it remains to be seen.
That's always a big question mark.
Yeah, it remains to be seen whether Snap would become another Facebook. See, Facebook IPO price was $38, and it's currently trading at $138. So if you invested in Facebook at the time of its IPO, you are in big profits. Or it could be another Twitter. Twitter had an IPO price of $26, and it is currently trading around $15.
Yeah. So given all the up and down potential of an IPO, just in general, just by nature of that animal, still these types of ETFs that are exposed to IPOs still present a low risk way of getting involved in that corner of the market?
Sure. So if you are excited about IPOs, then I think ETFs are a safer way because they give you a diversified and low-cost exposure to a large number of IPOs. Because some of these new companies can be very successful, like Facebook, but many of them fail. So instead of maybe investing in one company, you can look at the ETF, which holds maybe 100 companies, and that way you get a lower risk exposure to this hot corner of the market.
All right, let's take a look at a couple of these. First Trust U.S. IPO Index, FPX, the ticker.
Yes, so this is the larger and more popular, older product in the space. It has about $680 million in assets under management. It tracks the 100 largest and most liquid IPOs in the US, and it holds them for 1,000 trading days, or about 4 years. It includes spin-offs as well, has an expense ratio of 60 basis points.
And then there's the Renaissance IPO ETF, IPO the ticker.
The ticker is IPO, that's interesting. This is a newer product and it's not been really popular with investors. It just has about 13 million in assets under management. This also tracks the largest and most liquid newly listed US IPOs, and they include companies either on the 5th day of trading under a fast track method or during their quarterly review. And they hold companies for 2 years compared to 1,000 trading days for the earlier one. Expense ratio is the same. Both ETFs are market cap weighted and have a cap of 10% on individual holdings, so that company-wise risk is restricted. But as I mentioned, FPX holds spin-offs and then holds all those companies for a longer period compared to IPO. And in fact, FPX, the first one, has already added Snap, and this one, the second one, is expected to add Snap shortly.
So do these IPOs get added to these ETFs right on day one of coming to market?
No, not on the day one. Usually FPX includes during quarterly review, but in case of Snap, because it was an very important IPO, they decided to add soon after the launch, so they already hold it. The other one usually waits for 5 days, and after 5th day of trading, they add the new IPO company, or they can add it during their quarterly review.
And the performance of the ETF is really contingent to what's going on in the IPO market.
Exactly, how those companies perform going forward. So in fact, I looked at the recent performance, the 1-year performance. Over the past 1 year, they both have very marginally underperformed the broader market. And the first one, FPX, which has been around for more than 5 years, so I looked at the longer term performance. Over the longer term, it has beaten the broader market. So performance really depends on what's happening in
the IPO market.
Yeah.
If it's a hot IPO market in a particular year, chances are these ETFs are going to perform well.
Right.
And vice versa.
Exactly.
Interesting. Do you own either of these two?
I don't.
All right. Check out more ETF information in the ETF section of Zacks.com. Now, to get there, all you need to do is go to our homepage, Zacks.com. Use the Funds tab in the top toolbar. That'll cause another drop-down to occur, and then you'll be able to select the ETF section of Zacks.com. With Nina, I'm Terry Ruffalo.